Uh, Tushar, am I audible? Oh, Namaste all. A very good morning to all of us joining today. And on behalf of NCFE, I welcome you all to the inaugural webinar of the Financial Literacy Weeks 2026. It is a pleasure to have you all with us on the theme of KYC Suraksha Ka Pehla Kadam, KYC, your first step to many safeguards. Friends, when you talk about financial safety in today's fast evolving digital ecosystem, one principle stands above everything else. That is, prevention is always better than cure. In the recent years, a prominent report by the government states that in the last few years, frauds of more than 4,000 crores happened due to the KYC misuse. So, taking into account all these factors, NCFE is proud to celebrate the Financial Literacy Week 2026 on the theme of KYC. This brings us to an important message. Early and accurate KYC makes a decisive difference. Hence, KYC should not be viewed as a one-time compliance exercise, but a continuous safeguard that evolves with changes in a customer profile, contact details, and financial behavior. With this, it gives me great pleasure to introduce you to our Honorable CEO, Sir, Alok Chandra Jina, Sir, for his special welcome remarks for the FLW webinar. Over to you, sir.
Yeah, good morning, all participants. Respected Mrs. Jaspreet Kaur, GM PFRDA, and all fellow stakeholders in India's financial education ecosystem who has participated today in this webinar. It's my privilege to inaugurate the Financial Literacy Week, devoted this year to a theme that lies at the very trust of the financial system, that is, know your customer. Financial literacy at its deepest level is not merely the ability to read financial products or execute transactions. It is the cultivated capacity of the individual to participate in the financial system with awareness, responsibility, and agency. Viewed through this lens, know your customer transcends its regulatory origins and emerges as a philosophical doctrine of financial literacy, one that anchors identity, trust, and accountability within the modern finance. Traditionally, KYC has been understood as a compliance mechanism, an obligation imposed by institutions, especially the service providers, to satisfy regulatory mandates. Financial literacy reframes this understanding. Within a literate financial society, KYC becomes a mutual act of recognition. The system acknowledges the individual, and the individual accepts and accepts responsibility for their financial identity. This shift from enforced compliance to informed consent is philosophical in nature. It mirrors the transition from the rule-based participation to ethically informed engagements, where the customer understands why identify matters, not merely how to submit documents. This is the basic crux of the financial literacy today. In fact, the KYC that we are celebrating Financial Literacy Week is a celebration of the identity of each and every individual participants in the financial ecosystem. In classical economic thought, assets were tangible: land, labor, capital. In the digital financial ecosystem, identity has become the foundational asset. Without verified identity, no account can be opened, no pension credited, no claim settled, and no legacy transferred. KYC, therefore, is the doctrine that teaches citizens that financial inclusions begin with self-knowledge, like who am I in the financial system, how am I representing digitally, how is my identity protected, updated, and transmitted over time. So a financially literate individual recognizes that safeguarding one's KYC is as vital as safeguarding one's savings. All financial systems rest on trust. Trust that contracts will be honored, trust that benefits delivered will be delivered, trust that rights will be protected. So KYC institutionalizes trust by converting anonymity into accountability. It reassures the system that the participant is genuine and reassures the participant that the system can recognize and serve them reliably. As a doctrine of financial literacy, KYC teaches a subtle but powerful lesson. Trust is not blind, it is verified. This principle is especially relevant in the age of digital finance, where physical presence has been replaced by virtual interfaces and algorithmic decisions. Financial literacy concerns the entire financial life cycle, from past bank account to final claim settlements. KYC provides continuity across this life cycle, ensuring that identity remains intact even as circumstances change. Education, employment, marriage, migration, retirement, and succession all are considered in KYC. Like failures in pension delivery, insurance claims, or nominee transfers often arise not from product design, but from broken identity traits, that is KYC. A philosophically informed view of KYC recognizes it as a bridge between generations, protecting both the living and the inheritors of financial rights. And in the present context, in a digital mediated economy, KIC is also a doctrine of self-care and ethical responsibility. Financial literacy teaches individuals not only how to learn and invest, but how to prevent impersonation, how to detect fraud, how to protect credentials, how to avoid misuse of identity. Here, KYC becomes a moral practice, an act of vigilance that safeguards not only personal wealth, but the integrity of the financial ecosystem itself. True financial inclusion is not achieved by opening accounts. It is achieved when individuals can use, trust, and benefit from financial system without fear or friction. KYC, when understood and practiced consciously, democratizes finance by ensuring equal recognition, equal protection, and equal access to remedies. Thus, financial literacy humanizes KYC, transforming a regulatory instrument into a civic competency. So KYC affirms a timeless truth: one must be known to be protected, one must be empowered. In today's India, finance has become frictionless, instantaneous, and mobile. With a few clicks, citizens open accounts, transfer funds, invest, insure, and borrow. Yet as access expands, risk travels at the same speed as convenience. In this environment, KYC is no longer a procedural formality. It is the first line of defense in digital finance. KYC performs a dual. First, it protects the system by preventing identity theft, money laundering, and financial fraud. And second, which is also more important, in terms of protecting the citizen by ensuring rightful ownership, seamless claim settlements, and uninterrupted access to financial services. We are witnessing a quiet but powerful transformation of KYC practices from paper-based verification to eKYC, video KYC, Aadhaar-based authentications, and AI-enabled fraud detections. Digital safety today is preventive rather than reactive. That's one issue that everybody is also trying to challenge. The emphasis has shifted from checking identity to continuously validating the authenticity and intent of the participants of this financial ecosystem. However, technology is not enough. Financial literacy must keep pace with digital innovations. A customer who doesn't understand why KYC matters, how to update it, or how to safeguard credentials remains vulnerable, regardless of how advanced the system is. Therefore, Financial Literacy Week is not merely an observance, it's a collective commitment, a commitment to empower citizens to keep their KYC updated and accurate, recognize and resist fraud and impersonations, use digital financial services with confidence, caution, and clarity. In today's context, ma'am is there to talk to you about the KYC, especially in retirement planning and pensions. Retirement planning is unique among financial decisions. It's long-term, irreversible, and deeply personal. I won't go into the details of that. Ma'am will talk about it. Uh, the identity protection, I'll just say, I will not take more time in terms of this. I'll just say, as you deliberate today through this webinar, let us remember a financially included citizen is not necessarily financially protected citizen unless inclusion is anchored in awareness and responsibility. I thank again all the participants, those who are in fact the real stakeholders of this financial ecosystems, and I would say the financial literacy to take it forward. With these words, I formally inaugurate Financial Literacy Week and wish the deliberation every success. Thank you so much.
Thank you very much, sir, for informing us as to the importance of KYC in FDA's life. May I now have the privilege of inviting Jaspreet Kaur, Madam, from PFRDA. Ma'am is currently holding the position of General Manager and heading the departments of Contribution Management, POP, Aggregator, and NPS Lite. It's a privilege to have with us today, ma'am, and we really thank you for contributing, like taking a valuable time to address us. Over to you, ma'am.
Thank you so much, sir. Thanks, Alok Jena, sir, for a wonderful inaugural message regarding KYC in India, especially for pension systems as well. So, I would like to sincerely thank all NCFE team members for providing me this valuable opportunity to share my thoughts on the subject that is increasingly significant in today's financial ecosystem, that is KYC in pension systems. I'm Jaspreet Kaur, General Manager, PFRDA. So it is truly an honor to engage with you, with such an audience, and to contribute to discussions that strengthen transparency, security, and trust in long-term retirement systems. KYC plays a vital role in safeguarding subscriber interests, ensuring regulatory compliance, and enhancing the integrity of pension operations. Through this session, I hope to share practical perspectives, regulatory insights, and collaborative approaches that can further streamline the processes while maintaining strong safeguards against financial risks. Once again, I extend my heartfelt gratitude to NCFE officials for the invitation, the excellent arrangement, and for fostering dialogue on such an important topic. So I'll start with my presentation and I'll share the PPT. Can you help me? Share. Yeah. You need PPT. I'm just sharing. I hope it's visible.
It's visible.
Okay. So the theme of Financial Literacy Week 2026 is your first step to safe banking. And what I will be deliberating is KYC in pension systems, that is securing long-term retirement solutions. So as we understand, the first step, the KYC is the first step to safe banking, not only banking, to any other financial product, let it be mutual funds, capital market, insurance. KYC is the first step to enroll any subscriber for any financial account or financial services. And these days, even telecom service providers are also initiating KYC before providing any connections. So it is very important step to take any services. So before we go into the depth of the guidelines related to the pension systems for KYC, let us understand the basics of KYC. What is KYC? What is the purpose? Why is it done? And for whom the KYC is important? Many of us have already been aware of the word KYC, but what is it? They might not be aware of. So let me take you through the basics of KYC. So KYC is basically a mandatory verification process through which banks, financial institutions, intermediaries, and regulated entities confirm the identity, address, and legitimacy of the customer before starting any financial relationship. It involves collecting and verifying documents like PAN, Aadhaar, driving license, or any other approved officially valid document to ensure that the customer is genuine. What is the purpose of KYC? It helps the organization to verify that the customer is genuine. It prevents fraud, identify theft, and money laundering practices. It complies with the legal and the regulatory requirements. So in India, KYC norms are guided by the regulators such as RBI, SEBI, IDAI, and PFRDA. Why is it important? Because it protects the financial system from any illegal activities. It ensures customer authenticity and it enables faster subscriber onboarding for bank accounts, mutual funds, NPS, insurance, etc. So now let us understand for whom KYC is important. It is very important for multiple stakeholders. The first of them is customers or the subscribers. It is important for the customers to access the financial products like bank accounts, NPS, insurance once the KYC is done. It ensures secure and legitimate financial transactions and financial identity as well. It is important for financial institutions and intermediaries as well, because most of these intermediaries conduct the first level of KYC for any subscriber or the customer. It helps them comply with the with various laws and manage risks within the system. It is important for the regulators and the government because it enables monitoring of the financial systems. It supports transparency and anti-money laundering efforts. As a financial system as a whole, it is very important to have a verified KYC account for each intermediary. So let us understand, why do regulators KYC guidelines follow PMLA? What is PMLA? PMLA is Prevention of Money Laundering Act 2002, which was enacted by the Parliament of India. It is an Indian law made to prevent money laundering and stop illegal funds from entering into the financial system. Regulators like RBI, SEBI, IDAI, and PFRDA issue their own separate KYC guidelines, but all these guidelines are aligned with PMLA Act or PMLA rules. So PMLA is a law that allow authorities to detect and investigate illegal money, attach assets earned through crime, and ensure banks and other financial institutions follow strict KYC verification process. The main purpose of PMLA is to prevent conversion of black money into white money, combat terror financing, and financial crimes. It increases the transparency in the financial transactions. So PMLA applies to reporting entities, which are, so now what are these reporting entities refer to? These are banks, NBFCs, insurance companies, mutual fund houses, POPs, which are points of presence for opening any NPS account, and stockbrokers and other financial institutions. These all entities are referred as reporting entities as per PMLA and as per the respective guidelines issued by the regulators. So basically, PMLA sets the law and regulators create a practical rule book how to follow those guidelines. Let us also understand what are the common KYC documents. So first is identity proof, second is address proof, you must be already aware of. Under identity proof, we normally take Aadhaar card, passport, voter card, driving license, PAN. For address related proofs, we take Aadhaar card, utility bills, passport, bank statement. Along with these documents, photograph and signature of the customer or the subscriber is very important. It is mandatory to take recent photograph of the subscriber while undertaking any new financial relationship of any financial account. What are the basic types of KYC? Let us understand that. There are basically 3-4 types. First is physical KYC. So what is physical KYC? Once a subscriber has the option to go or to visit any financial institution, let it be bank, mutual fund house, and get the account opened. So when you visit any branch in person and give your OVDs, which are officially valid documents like passport, Aadhaar, PAN, photo, then you visit the branch in person, and that kind of activity is called as physical KYC. They verify your document in person or in physical mode. Second is eKYC or digital KYC. So this is done through online verification like Aadhaar, OTP, video KYC or digital signatures. And another one is, which all regulators are focusing on, is CKYC, which is Central KYC Registry of India, a centralized system to store customers' KYC records in one place so that they do not need to submit KYC documents repeatedly to different financial institutions. CKYC is maintained by Central Registry of Securitization, Asset Reconstruction and Security Interest of India, which is CERSAI. So what are the features of CKYC? Every customer can get a CKYCR number, which is a unique 14-digit number. So it basically digitally stores your identity and address documents. It reduces duplication of KYC across banks, insurers, pension funds, etc. So CKYC is also called as a single source of truth because it creates one verified standardized KYC record that can be reused across all regulated financial institutions instead of repeating verification or submitting the same documents again and again to different institutions. So these are the basic types of KYC. Now I will touch upon the PFRDA's guidelines on KYC, anti-money laundering and combating of financing of terrorism. These guidelines emphasizes the importance of risk-based approach for periodic updation of KYC and also at the time of onboarding any subscriber into NPS, and to conduct client due diligence at frequent intervals. So what are the KYC norms under these guidelines? So these guidelines, as per the guidelines issued by PFRDA, the reporting entities, which are the banks or any which we can refer to as POPs, points of presence, they have to determine the true identity of any subscriber being enrolled in. How it is to be done? Only through the conduct of KYC by taking updated or the relevant proof of address and proof of identity for that particular subscriber. Then the reporting entities have to ensure that no anonymous account or fictitious amount is opened for any of the by any of the name. So any such account, any account of a person should not be opened whose identity cannot be disclosed or cannot be verified at the POP's end. Another important responsibility for the REs is to verify the identity, address, and match the recent photograph given by the subscriber with the records. If there is some suspicious found, or if the reporting entity is not very sure about the financial transaction or identity of the concerned customer or the subscriber, they can file the suspicious transaction report with Financial Intelligence Unit of India. So these are the basic responsibilities of the various REs associated with NPS. So as per our guidelines, what are the different, we have given approximately 7 modes of KYC through which bank or the POP can get the KYC done for any of the customer. Let it be new subscriber onboarding, or it might be for periodic updation, which we normally refer to as re-KYC. So the first method is using unique CKYC identifier. The reporting entity may perform the KYC process preferably by using the unique CKYC identifier in both physical or digital mode, which contains of 14-digit unique number given by CERSAI. So what are the methods available to the public to obtain CKYCR number? First is they can go to CKYC portal directly, and they can enter their mobile number, which is attached to their banking records, to get their CKYC number. Normally, a card is generated on which a 14-digit number is mentioned. That is your CKYCR number. Second is by giving a missed call on 77990 to get your this CKYCR card on directly on your mobile. Then is this KYCR information can be fetched also through DigiLocker. And if you're not able to do any of these, then you can approach your bank or the financial institution to get your CKYCR number. So by these methods, you can get the CKYCR number, and every time you visit any branch or any intermediary for financial account opening, you can give this CKYCR number, and you need not to give separately any address proof or any identity proof, provided all the information is updated in that account. Second is physical face-to-face verification. Physical verification, as I have told you earlier also, it is like going to the branch of the bank or any other financial intermediary and submitting your OVDs, let it be Aadhaar, PAN, photograph, and passport, any of the valid OVDs to the bank, and they will verify your identity in person. That is called as physical or face-to-face verification. Then is another method of conducting KYC as per PFRDA's guidelines is Aadhaar based KYC. So it has three different modes. First is OTP based eKYC. OTP based eKYC means the customer enters the Aadhaar number. OTP is sent on that Aadhaar number, and on entering the OTP, the identity is fetched electronically. Second is biometric eKYC authentication. Under this, the Aadhaar holder authenticates the system using biometric data through a certified device provided by the respective institution. UIDI verifies the biometric and shares the verified identity details. So with this also you can get your KYC done. And the another one is Aadhaar offline XML file. With this, any subscriber sitting at home can download this file from UIDI portal, and it is protected by the password. So once the file is downloaded, you can send it to the bank or you can submit it to the respective financial institution to get your KYC done. They will take your file and they will punch in the password protected given by you to access that file, and the details are verified. Another important form of or mode of KYC given by PFRDA's guidelines is digital KYC. So what is digital KYC? Digital KYC involves capturing a live photograph of the subscriber, a digital image of an officially valid document, and geo coordinates of the captured location, all recorded electronically by an authorized officer. This method is deemed to be in person or face-to-face verification for conducting any client due diligence services by the respective financial institution. Another important method underlined by PFRDA in its guidelines is video-based customer identification process, which is called as VCIP. It is a consent-based alternate method of establishing subscriber's identity using an equivalent e-document of any OVD. OVD is what? Officially valid document. During the call, the officer asks the customer to show the originally valid document like PAN, Aadhaar, passport, driving license, any of the OVD, confirm basic details, what is the name, date of birth, etc. It ensures that the face matches with the documentary photo. To confirm that the person is real and present, customer may be asked to blink, move ahead, read random digits. System may perform AI-based face matching. Geotagging and IP logs are captured for this process. A live photograph is also captured from the video system. Details are cross-checked maybe with CKYCR records, Aadhaar, or internal databases. So officer marks verification as successful or failed to. But full video recording plus logs are stored securely for audit purposes, and once it is done, the account holder can be onboarded. So it is VCIP. These are the basic modes. It also includes DigiLocker fetching also. So subscriber or the DigiLocker OVDs are fetched by redirecting the subscriber to DigiLocker login, taking consent and pulling digitally signed document through API integration. And the last method, last mode specified by PFRDA's guidelines is bank's core banking system, which is known as CBS, where the subscriber is having the existing where the subscriber is the existing customer of any bank acting as the POP for onboarding of NPS subscribers. The KYC records maintained by the bank under the CBS may also be fetched as one of the mode of KYC, provided all the such documents are updated and the officer concerned verifies that these are the updated and the correctness and the completeness of such KYC information is obtained through OTP based authentication. So this is also one of the mode of conducting KYC only for the banks. So these are the basic modes of KYC. As I have already spoken about VCIP, so under VCIP, there are three different modes. First is assisted VCIP with human officer review. What is this? An official of RE conducts live video call with the subscriber to verify their identity. The official guides the subscriber through the process, ensuring real-time interaction and document verification. So it needs the human intervention of any human officer while conducting VCIP. Second is unassisted VCIP, whereas it is completely app-based or video platform-based, where there is no intervention of any human officer. The subscriber can directly get it done on their own, sitting at home, office, wherever. And the last is hybrid VCIP, whereas it is a combination of assisted and unassisted. So some verification is done through the portal or the web-based application, and other things like checking of liveliness may be done by the concerned officer. So it is called as hybrid VCIP. For the PFRDA guidelines on KYC also throws a focus on that for the purpose of liveliness check, intermediaries may use various parameters which not only involves checking of eyelid, eyeball or blinking, but may also use other factors like facial expressions, nodding of head, subscriber showing the OTP while being clearly visible on screen, real-time video recording, or displaying copies of the documents on the screen, etc. So it does not restrict checking the liveliness only for movement of the eyelids, eyeball, or blinking. So this is one of the important factors we have incorporated recently in our guidelines. Now let us understand what are the OVDs as per PFRDA's guidelines for KYC. What is OVD? OVD contains of basically 6 documents. First is passport, driving license, proof of possession of Aadhaar number, voter's identity card, job card issued by NREGA, duly signed by an officer of the state government, or letter issued by UIDAI or National Population Register containing the details of name, address, Aadhaar number, or any other document as notified by the central government in consultation with the regulator. These are basically 6 OVDs specified in our guidelines. However, where the OVD submitted by the subscriber does not have the updated address, the additional documents which I'm going to tell you right now may also be submitted for a limited purpose of proof of address. So one is utility bill, which is not more than 2 months old of any service provider. Second is property or municipal tax receipt. Third is bank account or post office saving bank account statement or passbook. pension or family pension payment orders issued to retired employees by the government departments, and the letter of allotment of accommodation from employer issued by state or central government departments, statutory or regulatory bodies, public sector undertakings, etc. These documents can be submitted if you do not have an updated address in any of the officially valid documents. However, the subscriber shall submit the OVD with current address within a period of 3 months of submitting the document specified above. If you have submitted a utility bill for address proof, you have to submit the updated OVD within 3 months of submitting these documents or opening of an account with any financial intermediary. These are the OVDs. Now let us speak about the periodic updation requirement of KYC. KYC is done at two stages. First is knowing new subscribers when an entity or the subscriber is getting a new account opened into any financial sector intermediary. Second is knowing existing subscribers, which means that once the KYC is done, it has to be updated into the system at the frequent intervals which is specified under the respective regulatory guidelines of KYC. So for NPS, we have categorized the updation into three layers. First is low risk, wherein the periodic updation of KYC is required to be done in once in every 8 years. So once the account is opened, after 8 years, the KYC has to be done again. For medium risk subscribers or accounts, this updation is to be done once in every 8 years. And for high risk customers or the subscriber, it has to be done once in every 2 years. So we have basically aligned the periodic updation of KYC majorly with RBI guidelines, because most of the NPS accounts are opened by the banks. So we have tried to align it with the RBI guidelines. So what constitutes the low risk subscribers? Salaried employees or pensioners of government, PSU listed companies, self-employed persons, including individuals engaged in Agri, Lite and MSMEs, minors, students and homemakers. These are categorized into low risk subscribers. Medium risk are any other salaried employees not covered under low risk, business persons, professionals, non-resident individuals and others not specified anywhere is categorized as medium risk, for which the KYC is to be updated in every 8 years. And high risk individuals or the subscribers constitute politically exposed persons or related to POP persons and high net worth individuals. So banks or the financial institutions have to categorize into three categories for conducting periodic updation of KYC. What are the other provisions for periodic updation of KYC? All modes of KYC, which I have discussed earlier, there are 7 modes, are permitted to do periodic updation of KYC as well. Second is, at the time of withdrawal or exit from NPS, the RE has to mandatorily required to do a fresh KYC, irrespective of its updation of KYC, maybe prior, just 6 months prior to this, but at the time of exit, the KYC has to be done again as a fresh. However, in case of no change in KYC information, a self-declaration from the subscriber may be obtained through subscriber's email ID, a mobile number registered with the RE or letter, etc. This is permitted only in case of periodic updation of KYC and not at the time of exit or withdrawal from NPS. If there is a change in address details of the customer, the RE may obtain a CKYCR number for updating the address, and in case if the same is not available, the RE may obtain any of the other OVD depicting the changed address. So the main priority for us to conduct KYC is to first obtain a CKYCR number from the subscriber. The banks or the other financial intermediaries have the responsibility of doing KYC initially through CKYCR identifier. So in respect of low risk accounts, the RE shall allow transactions and ensure that the updation of KYC is done within 1 year of its falling due for re-KYC. Similarly, for medium risk accounts, the RE has to ensure that the updation is done within 6 months from the date of falling due for re-KYC. And with respect of high risk accounts, it has to be done immediately, failing which there will be freezing of service request related to investment, a change in investment pattern, change in pension fund, or any other service request as well for freezing, in fact, for freezing of partial withdrawal and exit facilities also. So it has to be kept in mind that re-KYC has to be done at the specified periodic updations specified under our guidelines. Let us now speak about the KYC requirements for NRI and overseas citizen of India into NPS. As we all are already aware that NRIs and OCIs can also open NPS accounts. So there, how we can manage their KYC requirements. So the KYC processes require the POPs to obtain and verify the proof of identity and proof of address from the subscriber at the time of commencement of any new account-based relationship. For NRI and OCI citizens, in case of digital onboarding, the requirement to capture a live photograph of the subscriber, a digital OVD, and the geo coordinates of the captured location, all recorded electronically by an authorized official, shall be applicable. However, for this purpose, the requirement for a subscriber for being physically present in India has been relaxed recently via our guidelines. The POPs shall also ensure that the GPS location, latitude and the longitude captured by the intermediary matches with the latitude and longitude of the country given in proof of address by the subscriber. The digital onboarding application shall incorporate liveliness detection, random checks, and anti-spoofing, anti-deep measures, ensuring that the interaction is live, tamper-proof, and not re-recorded. So these are the basic responsibilities of the concerned REs or the subscribers for enrolling NRI or OCI subscribers into NPS. What are the OVDs for NRIs specifically for NPS accounts? So under proof of identity, the passport is to be taken, and for proof of address, the passport, and the for address proof, the residence permit, work permit, or foreign national ID or overseas driver license, if it is government issued, can be taken by the concerned reporting entity or the POP. So there are some other important notes with respect to the OVDs for NRIs, where the passport of the NRI subscriber contains both permanent and current address as foreign addresses. The same shall be accepted as the proof of address. In such cases, no separate Indian address proof is required to be submitted by the subscriber. However, where the passport of the NRI subscriber contains both permanent and current address as Indian, the same shall be accepted as valid proof of address for Indian address only. However, since the subscriber is residing outside India, a separate document containing the current address shall be obtained. In case the OVD presented by a foreign national does not contain the details of address, in such case, the documents issued by government departments of foreign jurisdictions need to be taken as a proof of address. It has to be noted that all such documents are required to be self-attested by the subscriber and attested by the authorized official, maybe of Indian Embassy, Consulate General in the country where the non-resident customer resides, notary public, or as specified here. So these are the requirements for the NRI subscribers with respect to KYC. Now let us see the requirements for overseas citizen of India for opening or for getting the re-KYC done for NPS accounts. Under the proof of identity, the OCI card and foreign passport both need to be taken. For proof of address, the foreign passport or the driving license, if it is issued by the foreign authorities, can be taken. Here also, where the passport submitted as proof of identity also contains current overseas address, the same shall be accepted as a valid proof of address. In case the OVD presented by a foreign national does not contain the detail of addresses, in such case, the documents issued by the government departments of the foreign jurisdictions may also be taken and to be attested by the subscriber for as a proof of address. Where a proof of address document is submitted in a foreign language, the regulated entity must confirm a duly translated English version is additionally provided by the subscriber. The subscriber has to submit a translated version of the respective document also. Next is RE shall ensure that the passport, visa, residence permit, and other supporting documents are valid on the date of onboarding, and expired documents like expired driving license date or expired passport need not to be taken and will not be permitted to be accepted under these guidelines. So the subscriber is basically responsible for providing the correct authentic documents to establish their identity or NRI and OCI status. Submission of any falsified documents may be reported to the appropriate authorities as required under PMLA provisions. So this is the responsibility of the reporting entity or the POP in case of NPS for clarifying this or for taking this. What are the other provisions related to NRI and OCI accounts? In case of such accounts, the periodic updation of KYC is allowed to be carried out any overseas branch of the RE with which the subscriber maintains the NPS account. So it can be done by the banks where they have the branches outside India. In case of existing NRI and OCI subscribers, the requirement of being physically present in India has been relaxed for re-KYC or KYC modification for existing subscribers. In case of no change in KYC information, as same for other accounts, a self-declaration may be taken from the NRI subscribers through their respective subscribers' email ID, mobile number, or letter. This is permitted only in case of periodic updation, but not at the time of exit or withdrawal from NPS. The periodic updation of KYC may be done through digital modes or electronic means or by submission of self-attested latest KYC documents or OVDs. So all these documents have to be attested. I have already told you in my previous slide. During periodic updation, the subscriber shall reconfirm the FATCA CRS declarations, tax residency details, and the current residency status, that is NRI, OCI, resident, to ensure the compliance with applicable FEMA and PMLA provisions. So these are all the provisions related to the KYC requirements for Indian subscribers and separate provisions for NRI and OCI subscribers. With this, I think I have covered most of the things as per PFRDA guidelines related to KYC, and I hereby close my presentation on this subject. And I thank NCFE for providing me this opportunity to speak on this insightful subject. Thank you, sir.
Thank you very much for giving us very valuable insights on the importance of KYC and OVD, that is officially valid documents for KYC. And you emphasized the importance of KYC not only for Indian citizens but for NRIs and OCIs, ma'am.
Yes.
We are really thankful for your kind guidance for this webinar. Ma'am, with your permission, we have a few questions from the participants. If we can take up some.
Yes, sir.
Yeah. One of the questions is CKYC 2.0, which states that there will be a centralized KYC across all the sectors, that is banking, insurance, pension, and securities market. Has it been enabled? And if yes, is it a one-time registration, or does a person need to register multiple times? That is the first question.
So CKYC 2 is not yet, I think, implemented. So they are working on that, but not yet.
Okay.
Yeah.
Ma'am, the second question is, uh, given the rise in frauds across the country, what are the measures that you would suggest for to see that the accounts of APY and the NPS accounts are not hacked and the money is safe?
Sir, I think for this now the periodic updation of KYC becomes very important, and the whole responsibility lies on the respective financial institutions, especially POPs in our case, to verify the identity of the customer again, in fact, at the time of onboarding and at the time of re-KYC also. So these measures are required to be taken at the respective entity level.
Yes. Thank you, ma'am. And the third question is, ma'am, there are accounts in banking which states that there are high risk banking, medium risk, and low level. So there's a different tenure by which you have to do KYC. So in case of NPS and APY accounts, what is the tenure that you have to update your KYC in a periodic manner?
So for periodic updation, we have categorized into 3 layers. First is low risk, in which the updation is to be done once in every 10 years. For medium risk clients, it is to be done once in every 8 years. And for high risk, that is HNIs or the politically exposed person, it is to be done once in every 2 years from the date of last updation of KYC.
Okay.
So it
Thank
is
you.
not account based, but it is based on the last updation of KYC.
Okay.
Yes.
Ma'am, it's a kind request that if we have any more queries, we'll just collect it from our side and share it with you, ma'am, so
Sure.
that we can have your guidance on the same and share it with the participants.
Sure, sir. Anytime. I'll be happy to share that.
Thank you very much, ma'am, and thank you
Thank
all
you,
the
sir.
participants. Just two small announcements. Tomorrow we'll be having the webinar series continued, and tomorrow we'll be having an official of RBI. Additionally, NCFE is conducting a national level financial literacy quiz for all the graduates and the postgraduate students across the country, and it is free for all. The details of the same will be shared with you all. We kindly request you to promote the quiz for ensuring maximum participation, and we are happy to announce that the winners of the quiz will be the national level winner of the quiz will be getting 51,000 rupees as a gift prize. And additionally, not only national level, we will be also selecting regional wise winners. So we will share the creatives with you. We request one and all to promote this quiz to ensure maximum participation and financial empowerment. With this, we come to an end of the first day of our webinar series. I once again thank ma'am for providing a valuable insights onto the importance of KYC in pension. Thank you, ma'am. And I also thank
Thank you,
our
sir.
CEO sir for his valuable insights for today. Thank you very much.
Thank you, sir. Thank you. इसको exit